In this video we're going to break down market orders in more detail. Understanding the basics of how an order is placed is important when beginning to trade. We'll look at how to place a market order and the difference between market orders and limit orders. We will also look at the pros and cons of using this order type. So what is a market order? Placing a market order means that you are willing to buy or sell your coins at whatever the current market price is. This order type indicates that you want your order filled immediately at the next available price. The market price is constantly changing depending on the supply and demand for that particular asset. When you place a market order, you cannot specify the price of your trade. Let's see how this actually works and where a market order can go wrong. When you place a market order, it is going to buy or sell the coin at whatever the current market price is. This usually takes a few milliseconds between pressing the buy button and when the trade executes. If prices are changing rapidly, the next available price could be different than the price quoted when you initially placed the order. It is still possible that the price can change in those few milliseconds. For example, say an investor places a market order to sell 20 HCN immediately, at the current price of 45 HTO. The price can move very quickly in those few milliseconds whilst your trade is executing. The coin can potentially skyrocket or take a steep dive, and your trade can go through at a much different price than you intended. This goes for buying or selling. There are advantages and disadvantages to using a market order in your strategy. Knowing the benefits and drawbacks is important to trade effectively. They can be executed very quickly in the system. As long as there are orders in the order book, a user can always sell or buy instantly. If the order book has more volume offered than a user needs, then the order will be fulfilled 100%. Limit orders might not. The order is executed at the market's current best available price, depending on volumes. The drawbacks to using a market order are also important to consider. The user does not specify a price. An order can consume different prices than the lowest ask or the highest bid available. Users may end up selling at a much lower price or buying at a much higher price than where the market was at that moment. Depending on the order volume and that of the order book in adjacent levels, the risk of slippage is high. Slippage is defined as drastic movement of price to a specific direction, creating huge spreads in the bid and ask price and chart outliers. The associated fees are only an estimation when a user is about to issue a market order. They could be more or less when the order goes through. If your priority is to buy or sell at an exact price or better, you may want to use a limit order instead. With a limit order, you specify a price, and the order won't be filled until the coin can be bought or sold at that price or better. Investors generally use limit orders when they have a target entry or exit price and are willing to wait for the market to move in their favor. Let's say, for example, that HCN is currently trading at 50 HDO, but an investor believes it'd be a good value at 45 HDO or less. This investor could place a limit order to buy the HCN at 45 HDO. However, because of the price restriction, there's no guarantee the order will be filled quickly or at all. If the coin does drop to 45 HDO or below, with enough volume available at that price, the order will fill and the investor will buy HCN for 45 HDO. So in summary, a limit order is an order to buy or sell at a specific price or better. A market order is an order to buy or sell at the best available price. For limit order, the buying and selling price has to be specified. As for market order, you do not have to specify the price and the order is executed at market price. Last but not least, a limit order is submitted when the price level reaches the target price. A market order is submitted and executed on an instant basis. Now that we have covered the market orders and limit orders, let's take a look at how to place a market order on the exchange. This order type indicates that you want your order filled immediately, at the next available price on the order book. The order book is a list of the currently open, buy and sell orders for an asset organized by price. The red section shows the sell order book, and the green section shows the buy order book. There are a few drawbacks to using a market order, which are important to understand. Let's say you want to buy 10 HCN, simply select the order type, to market, and insert the amount of HCN you wish to purchase. Once you're ready to confirm, click buy. Based on the order book, this purchase will be filled immediately, at the current market price. However, let's say you wanted to buy 3,000 HCN at the current market price. The market order is only going to fill a portion of the order based on the current price, and then it's going to work its way up the order book until it completes the order. As you can see here, it will buy 114.852 HCN at 42.97 HDO and then move up to purchase 687 HCN at 42.983 HDO. It will continue to move up the order book until the order is filled. The order can consume different prices, from lowest bid to the highest bid available. In this case, as the order book stands, the average cost to fulfill this market order would be 42.993 HDO. This is a result of slippage, defined as a drastic movement of price to a specific direction, which can create huge spreads in the bid and ask price. If your priority is to buy or sell at an exact price or better, you may want to use a limit order instead. With a limit order, you specify a price, and the order won't be filled until the coin can be bought or sold at that price or better. Investors generally use limit orders when they have a target entry or exit price and are willing to wait for the market to move in their favor. Since limit orders don't execute unless conditions are met, they can be effective tools to help protect investors from unusual volatility in the market. To learn more, please visit Himalaya.exchange and check our support channel. Don't forget to follow us on social media for the latest news and updates.